How do you pronounce your last name?
Petasky.
Petasky. Just wanted to double
Yeah.
check there. And the Luxus Group.
The Lexus Group nailed it. Yeah.
Luxus Group. Got it. Hi everyone. Welcome to the Capital Raiser Show, Season 5, powered by the Family Office Club. I'm your new host, Weston Walker, and we interview only the best investment managers and investment managers. Shout out to our sponsors, the Family Office Club, Capitalist Pro, and Invest Next. Today we have Stephen Petasky, founder and CEO of the Luxus Group, a national real estate luxury development company that creates a world-class lifestyle experience for people that want to connect their dreams, passions, and investments. Stephen, welcome to the show.
Thanks, Weston, for having me. Look forward to it.
Of course. Yeah, so go into your background in 2007, starting this, national luxury real estate development company, how you started from scratch and built it into what it is today.
Sure, absolutely. So my wife was pregnant with our first in '06, and at the time we were in two totally different careers. I was in the retail grocery business, and she was a news anchor journalist. And but the one common thing we had was we loved to travel. And as she was pregnant, we had a lot of friends saying, "Man, your travel's going to suck. And once you have a baby, it's so much harder. You're not going to want to leave your home." And we just felt like, that doesn't sound like as much fun. We love travel. We want to experience some new things, especially with our kids. And we recognize it's going to be different. And so we started to think about what different would look like for us. And we kind of worked out kind of three options. Option number one was renting hotels, which everyone can do, but really kind of sucks with a baby in the room, just not the same environment or same experience. Option two was renting, homes so we can have the size and kitchens and bedroom count that we're looking for. But this is like pre-Airbnb days. It was just Verbo, and back then it was really, really inconsistent. It still has the same challenges, which is part of our new offering in terms of a global luxury rental portfolio. But at the time, we just couldn't deal with the uncertainty of what to expect on the other side of making that booking on Verbo. And then the third option was owning our own home, but we didn't really have any money to kind of make that type of investment of the type of home we would want. But the benefits of that was you can get everything you want. You know exactly what you're going to get on the other side. The drawback was, even if we had the money, was lack of variety. We really wanted to experience different things. We liked ski summer properties. We liked hitting the beach. We liked golfing. So we thought, wouldn't it be amazing if we could have a portfolio of homes that we own that's set up exactly the way that we want. It's great for kids. We can, playpens and booster seats and baby monitors and salon grade hair dryers for the ladies that don't want to carry half a suitcase or a couple suitcases worth of extra stuff on. And then we can have the variety we're looking for as well. And so we thought this is a great idea, but if we want to buy 30 homes, we need about 30 to $40 million. Obviously, a lot more than we had, about many times more. So we thought we'd syndicate. So we went to a bunch of friends and family and kind of shared the dream of creating a syndicate opportunity where we buy these vacation properties together. And we raised $3.5 million and bought our first three homes: a condo in Maui, a nice luxury home in Scottsdale, and then a ski summer property in Western Canada. And the idea was simple. We all own the properties. We manage them for everyone. And based on how much you invest into the group is how much time allocation you're going to get to enjoy. Like, think private golf club meets real estate investment fund. And but what we didn't quite realize is how quickly those 18 people would tell 18 people and tell 18 people. And we grew quite substantially over the next 7 years, raised and acquired up to about just roughly about $100 million worth of real estate, 50 properties around the world in three different funds. And it turned from just a kind of a pipe dream of something that we were trying to solve our own problem into we were solving the problems for 400 plus families. And it was a really kind of exciting journey. And then we've had different iterations of the company as we've expanded and grown into luxury development space, and now have shifted gears into a managed rental portfolio around the world. So been a crazy 18 years for sure. Very, very exciting. It's just, but starting with the baseline, trying to solve a problem for ourselves, and it's grown from there.
Interesting. So what was the business model that you started out with? Obviously you had, the syndicate, and the investors getting the timeshare of the properties.
Yep.
You would think there'd be conflict in that some of the time, but what was the business model behind, that made you guys money?
Sure. The concept of syndication, obviously, in vacation home space in particular, has been around forever. Like, hey, I don't have $2 million, but if we all throw in 400 grand each, the five of us could split a home. And like you said, where the conflict generally comes is, well, who's getting Christmas and who's getting New Year's and who gets spring break? So our goal was to create something that had a specific program on allocation of time that was fair and equitable amongst the limited partners or the partners in the group. So that helped us to avoid that. And obviously, people get in knowing that flexibility in your bookings is key. You're not going to get Christmas in Maui every year, so you have to spread it around. And we created a really cool system around that allowed for this fair and equitable use of the portfolio. It'd be like a golf course, and how not everyone's going to get Saturday morning 8 a.m. tee time. You have to like take the good with the bad a little bit if you're going to be in a syndication. Otherwise, you just buy your own golf course and play whenever you want. So that was how we kind of satisfied, I guess, the business model from a user experience, and from a business perspective. It was We learned a lot on the journey, and I think what the industry would do is they charge very, very significant upfront fees of 20 to 30%, almost. Timeshares are like 50% plus, but even this, call it fractional club space, it was pretty high. We tried to enter with a much lower fee model where it was 7 to 10% upfront for effectively syndicating and organizing the launch of the funds. And then we had a management fee for operating the portfolio during the time. So that everything from asset management to guest experience, such as concierge, executive, everything effectively to keep the ship sailing forward. And then the third thing was similar to like any other fund, is there'd be a success fee based on the growth of the portfolio as it relates to profit and appreciation. So that was the kind of a 3 fee structure. I think that ultimately, if I were to do it again, I understand why the industry would charge 20%. It's very hard to be profitable in the business for less than 10%, and probably 15 to 20 is the more reasonable number. That basically we've since exited that business, but in the, for our peer group, that would be the number in order to be profitable up front. But that's the way we did it, and we made a living off of it, and it was great. And we bought into our own fund, as I think all fund sponsors should do, and we enjoyed it as a family during that time, and it led us to some really cool opportunities afterwards.
Yeah, and you moved more into the development space. So talk about your pivot from these more vacation homes to larger projects.
Yeah, so when we launched, the first 7, 8 years was just focused on one thing, and that was really growing this syndicate opportunity within the vacation rental space, or I shouldn't say rental, private club vacation space, because we did not rent out excess time. It was exclusively for the use of the partners, which was a very key attribute to what we were trying to do, exclusivity and ensuring something that's just for them. And then we got to a point we were growing very, very quickly, and we were finding that buying during the Great Recession was easy, but buying post Great Recession was a little tougher, trying to find homes that are the right fit. So we got into the idea of, let's self-develop homes and communities that would be the perfect fit for our type of utilization, which is a high transient use of the home with the right bedroom count and the right markets. And we launched 3 communities. We did one on the Big Island of Hawaii, 17 homes. It wasn't going to be exclusively for us. They were intended to be for us and other industry peers that are looking for the safe haven where other clubs could operate. We did a 3-home estate community in Palm Springs, Old Rancho Mirage, California. And then we did a syndicated deal where we acquired a ruin in central Tuscany and created a luxury villa effectively. And that was a slightly different syndicate, and we actually did rentals on that. So that was our foray into, call it, version 2.0 of Luxus, or our second kind of iteration. And we learned a lot. It's a development space is very, very difficult. You have to learn through the school of hard knocks and punches in the throat. And we had blind spots that hit us. In Hawaii, the volcano erupted right during our sales launch and basically shut down the island for a year. And we certainly weren't prepared for that. A global pandemic happened, which everyone knows about, which we certainly weren't prepared for that. But we got them all done, and they're world-class communities and properties, and we're very proud of them. But financially, it was a very, very challenging time. But we learned a lot. And as you say, you're either earning or you're learning. So we'll call that the learning curve for those 5 to 6 years leading us into COVID. When COVID hit, as very hard as it was on our business and me personally and our family, it did create some breathing room to decide what we wanted to do for the next 10 years. So what skill sets did we develop? What did we learn that we could do better at a greater scale? And we landed on 2 concepts. We basically cleaned everything else up and had thoughtful wind downs or exits of the various business units. And we launched on two things. One is a development arm, where my managing partner that runs that out of New York, and I'll share some more about that. And the second was our experience in the vacation rental space and we're almost in the 20-year rooms. We've been around doing it a long time, 20,000 vacations we facilitated. So we had a lot of experience in remote asset management, distribution, picking home selection, all those things. So that we decided to take, think of Airbnb meets Four Seasons or Airbnb meets, JW Marriott. It's taking a hotelier type approach with a high level sophistication and horsepower around sales and brand standards and apply that to the rental program. So unlike Airbnb and Vrbo, as I referenced earlier, they still are inconsistent. You still don't know for certain what you're going to get, and you could rely on 5-star ratings and reviews to help you understand how the quality of the home. But the reason why people still gravitate towards hotels is they know what they're going to get. It's a totally certain what the bed's going to be like, and the pillows and the coffee pot. So we're creating this hybrid model where there's hotelier brand standards combined with the variety and size that comes with rental homes, but we're not owning them anymore, purely managing them. So if someone's listening and they have a short-term rental property, you can either manage it yourself or you can hire a company like us that manages it for you. We bring a lot of sophistication and brand standard to it that drives, in pretty much all of our cases, we're beating market returns in each specific market simply because our guests, they come to us because they know what they're going to get. So that's the two things we're doing. I spend most of my time on that. My partner spends his time on the development side. And the development side as well, we learned that these projects that were anywhere from $10 to $50 million seemed like a good size. And these are very big projects, obviously, but we realized that there is scalable. And so we said, if we're going to do one project and it takes 5 years to do a project, let's do larger projects. So we took that experience from the previous and we focused on much larger developments. And we're now working with Four Seasons on doing the Four Seasons private residences Las Vegas. And it's an over $1 billion sellout project. So it's a beast. It's huge, but it's been amazing working with Four Seasons and our partners on that project. And now we're working on other ones globally that can continue to expand that portfolio. So those are the two things, and I'm not doing anything else for the next 10 years. Just focus on those.
For sure. Yeah, and talk about identifying opportunities and the types of returns that you've generated and your track record for investors that might be interested in this. We have some investors, some private equity groups that are listeners of the show.
Right.
And talk about your track record a little bit.
Sure. So I think from a track record perspective, I mean, if we look at a project on the development side, it has to be looking at a minimum of 25% IRRs for us to even take a look at it, because there is a high risk in the development space because there's generally leverage involved. There's entitlement risk, there's sales risk, there's lots of things. So we'd like to target more between 30 to 35% IRRs. They're really equity multiple plays more than anything because they're non-cash flowing assets. You buy the land, you get it entitled, you get the highest and best use, and then you build it and you sell it. So that's effectively the business model. So they are very high IRRs. And from a track record perspective, we've had projects that have achieved that. We've had projects where we've lost money. And I think that's, like I said, learning or earning. And some of those cases has been because of blind spots that we didn't identify. As I referenced, your whole sales being shut down after deploying endless amounts of capital and time and energy, and sales stop simply because the market stops because a volcano erupts and it has a negative kind of perception of the island. So we've learned to capitalize our projects different to protect us as we hit two very significant blind spots within the period of 2 years between that and COVID. And now we enter these projects with a more open mind to say, what is like the worst thing that could happen? And how do we protect us and our investors from that so we don't have a repeat of something in the past? And we're just in a better place now. And as a result of that, getting through those times, not unscathed, but getting through them nonetheless. And we just take that and apply it to the learnings to the next project.
Yeah, and talk about the opportunities and the biggest opportunities that you're seeing in the current market. Investors are, a lot of them are sitting on the sidelines waiting for opportunities. Are you guys active in this current market, or are you kind of waiting for the market to turn and more opportunities to come up that way?
It's a good question. In our specific business model, there's not really, certainly there's ebbs and flows in the economy. It's not like us buying multifamily or interest rates have a material effect. For us, it's really identifying true grade A front row land opportunities. And if we do, it could be in the middle of a recession, middle of a boom. It's generally has been quite recession proof, in particular working with company like Four Seasons. They have such a reputable brand as I would say is the best global hospitality brand that exists. And as a result, so for us, it's less about market timing and cycle, and it's more opportunity driven. And before we had to source these all ourselves, and now now that we are becoming more known, I guess, in the space, more deals are coming our way, and you filter them. There's a lot of really good opportunities, but we only want the very best. And because these projects take such a massive amount of capital and resources to get across the finish line, we try to pick one every couple of years. And that's kind of the extent that we do. And we don't really worry about the economy so much as will this play out over a 10-year life cycle from the very start to the very end? Maybe it's 4 years, maybe it's 8 years, but it's usually somewhere in that range. And just can't predict what's going to happen for future, economic cycles at that time. So, but if the property's grade A, and we have a grade A project with a grade A brand, then it sells. And so that's how we're identifying opportunities going forward.
Oh, of course. Yeah, and talk about your luxury branding. How do you attract your, people that stay at your properties and investors as well?
Yeah, so we did a small private raise for the vacation rental company, but it's something we've otherwise capitalized ourselves. So we weren't really looking for outside capital. Instead, we, as a management service-based company, we own the majority of it, and again have a small investor group that act primarily as ambassadors, not just investors, and helping us spread the word and spread the love about the program. As far as how we did it, we try not to reinvent the wheel. We have worked with Four Seasons, we've worked with Marriott, we've worked with Rosewood. So we've had a lot of experience working with amazing hotel brands, and we got a chance to see how they did it. And they don't reinvent the wheel. They establish a brand standard that they stand behind, and then they apply them to other people's assets, developers that are building hotels and residences. So we created our own brand standard that had already existed for the previous 16 years, but refined it to the point, created partnerships with multinational companies like Dyson and LG Electronics and Mocha and others to find what is going to be in each Luxus home. Like, what is that brand guarantee that we can give our guests? And we now have that established. So that took a long time though. Like, it was, we've been doing it for 16 years prior. Then we spent 2 years building the model, and here we are in year 18 launching. So now, from a guest perspective, usually we had a large following over many years, thousands of people that have touched our brand, but we want it to be tens and tens of thousands. So the best tool for that is just playing the long game. There's no very quick path. I mean, you could do bus stops and billboards and digital all you want, but that's how brands might go. But for most times, they burn all their capital and lose. We're doing it through experiences. If people start to follow our brand, it's because they probably had a vacation at our property. Maybe they found us on Airbnb. Maybe they traveled with a friend, or they heard about it from a friend. And it's very much a hockey stick trajectory. There's nothing linear about this. It's a slow start, and you build it up over a 5 to 10 year life cycle. And we're 2 years to kind of into that 10-year journey now. And so we're in it for the long game. It's kind of established through our brand and our company over the previous couple decades. And over time, it's just going to be 1 turns to 2, and 2 turns to 4, and 4 to 8, and so on and so forth. And as long as we can maintain that brand standard, which we do and we will, then people will keep coming back, because there aren't really other alternatives that are going to give them that hotel-like experience in a vacation rental.
Sure. Yeah, and you've really turned this from a boutique company into a larger company that's national and has development projects, partnering with the Four Seasons and other brands. Talk about the partnerships that you've built with these brands, and also your development partner in New York, and what you look for in those partnerships.
Sure. So there's kind of 2 types of partners. I have my actual business partner, and he runs the day-to-day of it. Very, very smart human being, amazing person, and he's built a great team in New York. So they run that office there. And to run a good shop in that space, you need to have sophisticated talent that can understand how to underwrite a model, understand how to budget, understand how to deliver and execute, and prepare to put in the time, knowing that there's nothing but hiccups and challenges when you're trying to do projects of this scale. So that group and my partner there and that team runs that day to day. And then we have joint venture partners, and the joint venture partners will differ and vary project to project. Who can add the most value, the most value we could add for one another in making sure that project is a success. So we have partners from Florida that build luxury towers, and so they bring amazing construction expertise and financing expertise. We have working with partners in Europe for some European-based projects that have capital and construction expertise. So in areas where we find that we're lacking, we could do one of 2 things. You can hire within and build that skill set, that proficiency, or we just have a joint venture partnership with a landowner or a capital partner that can the 1+1 = 3 type thing. How do we leverage each other to make a better project, have a better return, and a better end experience for the guests and the people that we're selling to? So partnerships, they're two different. Joint ventures last for the life of a project and then they're gone. But when you bring someone in your business, they have to be the right person because partnerships fail all the time. And I've got the perfect person that we just have a great team and great collaboration, and we work very, very well together, complement one another. And we dated for a long time. He was a long-term friend, but we spent 8 years in the business before we became an equity partner, which I do think was very valuable to make sure that it's both a fit and we're committed to this for the next 20 years. And hopefully both retire with us together down the road. And that's something people rush to partnerships, but if it doesn't work out and you don't date for a little while and you just go right into marriage, divorces are more common. So in any event, that's how we've done it, and we feel very blessed to have worked with some amazing people.
Yeah, for sure. And talk about your next steps for your company. How do you plan to scale this and multiply, across the country and development projects and so forth?
Yeah, so on the development side, it's pretty clear. We now have working with brands exclusively, so we're not doing any privately branded projects anymore like we did in the past. We really we just say no 19 times out of 20, and make sure that the projects we take on can fit kind of that investment criteria or buy box, if you will. And then we make sure that we partner with the right flag. And again, as I mentioned, Four Seasons has been incredible for that. And ideally, we do Four Seasons projects exclusively forever. I would be very happy with that. But the development space is scalable, but in a different way. You can certainly expand the size of your team, the amount of projects you pull in, but it's not like it becomes where you have thousands of employees. It's just a different type of business where we just keep this team small and lean and work together on identifying project based. But if we don't find a project for a year, we don't have to worry about it. We can wait a year to find the right asset to pick up. On the vacation rental space, though, absolutely built for scale. It is built for the concept of that could be a potential exit down the road that could be scalable. And so not all businesses have the luxury to do this, but we did spend a lot of time, a lot of money, a lot of resources, like I mentioned, 2 years building this business model back to front. I've never done this before, honestly, Weston. It's the first time where we thought about the end in mind first. What type of business do we want this to be and need to be down the road to make the impact that we're trying to make from a guest experience and a homeowner experience and an investor experience? And we worked it back from 7-8 years in the future to day one. What's the actions we need to take today? So, and we took a long time doing it. Not every business has to, but I think a lot of people, myself included in early stages, was a little more Wild West. You just go and you got a customer that wants to buy something, so you sell it to them and you now have a business and you grow from there. This time we said, okay, we've been doing this for 2 decades. How do we build something that has, with the end in mind first? And so we can work towards a specific goal. It's, again, not linear. It's not a straight line. There's going to be lots of ebbs and flows for the product and the growth over that time. But it's been an amazing experience because we are all focused on 2031 and where the business is going to be and what it could be worth and what type of impact we're having. And that's how you build a scalable model. You invest in the foundation first, and then you can just layer the customers on and the growth after that.
Sure. Yeah. And with growth, often comes more employees. So how do you attract those employees to your firm?
So we originally, it's a good question. We had, originally because we were based in Edmonton. So our offices are in Edmonton, Alberta, Canada, New York for the development side. And then we have an office in Siena, Italy, where we do projects in Tuscany. But so originally it was just like, we met a great person. They seem like a great fit. They have the core competencies we're looking for. Let's hire them and we build this together. Now that we're at a different maybe size and scale than we were before, it's a little more sophisticated process where you're really working on a skills matrix, core competency set, a values fit. A core values fit is critical. We hire, evaluate, and liberate based on core values in an organization. So we spend a lot more time on the front end, and the attraction of the labor is easier when you have been around for a long time. I think people that even if you've got a new product offering within a long-term established business, it's a little more, you have a higher degree of confidence that you're going to survive the ups and downs. So we're able to attract some pretty top tier talent to the various organizations as a result. And knowing that, again, it's not a straight line to success, but when you build yourself with the right team around you, your odds of success increase exponentially. So we use various recruiting firms and job posting boards, a lot of referral base that comes from our existing network. And we just get hyper picky on who we're going to add value or who's going to add the most value, because it's a two-way street. We often try to, by the third interview, when you're really trying to recruit someone, we do the opposite. And we actually say all the bad things that could happen, all the challenges we're going to be facing, because it can be very romantic joining a company that works with Four Seasons and works on the luxury vacation rental space. I mean, everyone says I'll join, but it still is a hard, grindy business like any other business. And so we spend a lot of time talking about the challenges they'll face on a daily basis and scenario play with them so that they can understand that it's not all sunshines and roses all the time. I think we have a very cool business and a great culture, but it is about hard work and serious people. And we have that, and that's kind of built into the hiring process now, when before it wasn't.
It's interesting. Yeah, one last question for you, Stephen. What is
Sure.
the best business advice that you ever received?
Best business advice, I would say, is a couple things. I mean, at the end of the day, all you have is your integrity. So even during our hardest of times, we had various off ramps that would have protected ourselves financially with exiting some of these projects when the tough times came. But I wouldn't be able to sleep at night. At the end of the day, that would have came at the a detriment to our investors. So if I'm going to see this thing through and I'm going to die in that mountain, then I'm going to die in the mountain, because we're going to get it through. And integrity is all you have in business at the end of the day. Sure, it might save you in a deal or it might make you some more money, but it's not the long game, which kind of rolls to the second point of advice. Was mentor told me a long time ago, both my father, who is a mentor, and then an external mentor, and they both resonated deeply probably about 10 years ago, 15 years ago now, is you have to play the long game, especially in real estate. There just aren't quick wins. And the challenge about it is a lot of people want to make money quickly and to afford their lifestyle, whatever it may be. But in our case, we want to make money in the long term. If that means sacrificing the early years in order to build a better business, play with the long game in mind. And if you can play that, then you make all your money in the second half of your career. You learn in the 20s and 30s, and you earn in the 40s and 50s. That's great by me, because I'd rather that than just rush out of the gate and then fail along the way, versus building that thinking long term in mind primarily.
For sure. Yeah, it's step by step. So, Stephen, if anyone's interested in investing or partnering with you, how can they reach you?
Yeah, so I am on Instagram and LinkedIn. I don't post a lot, being perfectly honest. I should be better at social media, but just not. But Stephen Petasky, so just as it spelled out on both those platforms. Hit me up, DM me if you're a homeowner for vacation rental. If you're an investor, we have very limited raises on capital now, so generally has to be in a pre-established relationship. But we like meeting new people that are looking to invest in different things, because there could be a fit down the road. So hit me up on a DM on either of those, and happy to have a conversation.
Sounds good. Thanks for coming on, Stephen.
Thanks, Weston. Appreciate it, man.